Brazilian equity tailwinds and headwinds, and barn market close today, and more on Robschild. EWZ, the Brazilian ETF, continued its uptrend higher today, rising 2.35%. This, along with EWZS, Small Caps of Brazil, and BRZU, combined make up one of the largest portions of the Robschild portfolio. And I wanted to discuss Brazilian equity tailwinds and headwinds. In other words, tailwinds, things that are behind it, pushing us further ahead, and, potential headwinds, things that can slow us down. Today is Tuesday, November 11th, 2025. Happy Veterans Day, everybody. Because it's Veterans Day, we had the bond market close today, which means in American markets, there is a degree of the cats being away and the mice playing. So that gives us extra good reason to look at foreign equities, and in this case, Brazilian, with one L. So first, we're going to take a look at Brazil equity tailwinds. The first thing I want to do is compare the debt to GDP of the United States versus Brazil and these other metrics here. One of the ongoing discussions and arguments of worldwide de-dollarization is the fact that the United States government, with their world currency, has been spending a bit more than what makes markets very comfortable. We're currently at a debt level of 120% to GDP. This was because of the massive COVID spending and stimulus. A lot of times this can rise because of war. It typically does when that happens in countries. And so it was very notable to gain this much debt over just it was a worldwide pandemic. And while the United States dollar has not lost its global reserve currency status, it's going in that direction. And part of the problem is the amount of debt. And the powers that be right now don't seem to have a whole lot of interest in lowering that. I know the tariffs are supposed to help with this, but we have yet to see any kind of big dent in this. Now, comparing that to what's going on in Brazil, believe it or not, has less debt to GDP than the United States. Typically, emerging markets will have more especially than the world reserve currency. So they're only at 78% of GDP in 2024. So right away, we have a bit of a reason to see some strength coming into the Brazilian real, their currency itself, compared to the US dollar. DXY, the US dollar index, has been falling lately. It looks like we may be in a blow-off top situation. DXY is measured against other world currencies and gold, kind of a combination of things. It's mostly the upside down of the euro, but this falling can add to the bullishness of the Brazilian real, which is the chart we're going to look at next compared to the US dollar itself. Since really the beginning of 2025, the Brazilian real has been going higher and higher and higher. Now, because of its status as an emerging market and other reasons, over time, this typically drops compared to the dollar, but also has its periods of strength. As you can see, from September 2003, it was 33 cents that got you one Brazilian real, and then by August 2008, the real had doubled in price, going to 64 cents. So the currency by itself can easily be a tailwind as long as the Brazilian real continues higher. This right here compares the fund EWZ itself, this blue line, to the red and green candles. You can see how well it matches up. I also want to take note that since the very bottom of the Brazil 2 USD in December of 2024, we're up about 22%, while the ETF EWZ currently is up 51%. So it sort of has a leverage on that too. Next up, we're going to talk about the inflation rate. In the United States, the official inflation rate most recently year over year is 3.01%, and steady, and it's above the Central Bank of the United States goal of 2%. Now in Brazil, the current inflation rate is 4.68 and falling, and the goal is 3%. Trading Economics has a chart, and since March and April of 2025, you can see that we were at 5.5% inflation rate in Brazil, and now we've dropped down significantly, into October, now being at 4.68. Next, we take a look at inflation expectations. Right now, the 10-year break-even inflation rate is 2.3%. And in Brazil, they don't have the exact way of measuring, but it's estimated somewhere between 3.5% to 5% is expected for their inflation rate moving forward. And this is all while the monetary rate and policy in the United States, right now the federal funds target rate is 3.75 to 4% and falling. We're in a cutting cycle. The Fed funds futures in the 2-year and the 10-year all show that rates are going down. And then in Brazil, they're at 15%. That's enormously high. That's the equivalent of what had happened in 1980 in the United States, when inflation was out of control. I find it very interesting that the central bank interest rate right now there is 15%, and the actual inflation rate right now is only 4.7. And while the United States is cutting and expected to continue cutting, Brazil actually just had a data drop showing that Brazil's central bank shows stronger conviction in keeping rates steady. So fiscal hawkishness at what I think is a very high rate. Sorry, I forgot to bring this up, the Brazil interest rate, just to show the dynamic of this. In 2020, this was actually all the way down to 2%. Previously, we were at 14% in 2016, dropping to 6.5% by 2018-19. Then, dropping even before we got to the whole COVID thing. And then they were at 2%, rose aggressively to 14.5%, cut, and then rose again. And now we're at 15 and holding steady. Now, when you combine all of these things together, they have lower debt to GDP than the United States. Their inflation rate is falling towards their goal, and they are being their central bank is acting fiscally hawkish, while the U.S. central bank is cutting rates while still above their inflation target and not really dropping yet. All of these things can change, but these are the conditions that I see right now, and they could continue. One of the things that I like about EWZ is that it has a very high dividend payment. They pay out the money, and 30% of the profits, about 30% of the profits made from EWZ are from exports. So add to this that, about 30% of those exports go to China. They have a lot of trade with China, while China is seeing economic warming. Since yesterday's headline I wrote here, industrial growth in China gives copper a bid. They're experiencing less deflation in their PPI, and CPI is rising. So the way I see it, there are tailwinds coming straight from China. Before we move on, one of the other reasons EWZ and Brazilian equities have been going up is because they're sort of playing nice with the United States by cutting their dependence on Russian diesel. And them doing this is a little bit of a sign like, hey, yeah, we want to do the whole American thing, which involves freer capital markets. In a way, it's geopolitical, easing between the U.S. and Brazil. Add to this that the price of gold may be indicating another commodity supercycle. One of the reasons that EWZ, the fund itself, in 2002 had multiplied its price by about 20 was because of a commodity supercycle. The prices of the things they're sending to China going up. If China is getting pulled out of its glut again, this is potentially a headwind, and potentially suggesting that we might see another commodity super cycle along with gold. And like I often say on the show, this is where the gold to crude oil ratio comes in really handy. We can see that gold has never been more expensive besides COVID, when oil went negative briefly. It has never costed this much, this little amount of gold for this much oil in the past, 75 years, since 1946. One of the ways that this whole divergence between the price of gold and real economic things like copper and crude oil can happen is, the other things can rise to gold. If gold is right and is suggesting that fiat currencies, including the dollar, will fall relative to other things, well, then the other things will eventually catch up to gold, one of those things being crude oil. And then the other note I have here, we already went over the US dollar falling, and a lot of people are expecting it to drop. So again, that can be another tailwind. So now looking at the headwinds, I know it's a much smaller chart. Obviously, I'm personally a bull on Brazilian equities at the moment, but yeah, there is actually deflation risk if, gold, oil, iron, all the stuff that they produce, food, if that stuff starts dropping in price, the deflation risk is there. And if stuff goes down in price, it affects the profits of Brazilian companies for sure. There's also definitely currency risk. As I showed you earlier on the chart, the EWZ chart follows the Brazilian real very closely. And over time, for the most part, this is always what happens with emerging market currencies, is they typically devalue faster than, especially the global reserve currency, currently the dollar. So there is currency risk involved. I think it's somewhat mitigated by the fact that the GDP, debt to GDP of Brazil is lower than the United States right now. But, their target inflation rate is higher than in the US. It's 3%, not 2% as well. And then there's, of course, political risk. A lot of Latin American countries have a long history of the government finding out that companies are making lots of money and saying, hey, wouldn't it be nice if everybody had that money? And I'm not saying who's right or wrong, but it does take away incentive of investment when the companies that you own, too much of the earnings or profits end up going straight to the government instead of the shareholders, which, are public, by the way, including you and me. Like, we can own these companies, but I'm not here to get into the political side of things. So all these things put together, I think are contributing to EWZ rising. Sorry if it's too small. Today it went up significantly, 2.4%. Again, my exit plan for this is to sell around $42. Right now, the dividend yield, because of the price that it's at, is currently around 5.2%. Notably a lot higher than the S&P 500 dividend yield. This one's, 4 to 5 times higher. So anyway, without even taking into account potential, growth in the earnings of these companies from all those tailwinds, it's still already at a pretty high dividend rate, which I think is it. I've said is on my website that I think that's too high. So, I think a more fair rate for a dividend for this country right now is 4%, which is why my plan is to sell around $42. Next, we have a headline from CNN talking about, it says right here, I'll read the headline. The Senate sent a funding bill to the House. Here's what has to happen next to reopen the government. Basically, the House, I think, is voting on it right now as I speak, and then the president signs it, and then I think it's over. And I'm not sure how long it's going to take after that for the economic reports to start coming out, but they will. The most important one is this coming Thursday. They might have to wait till the following Thursday if they don't have time to get all the data already. But coming up in a nutshell, we have 7 weeks of initial continued jobless claims that we have no idea what the numbers were. It's incredible amount of information. Later this week, we may get PPI and CPI. Also, December 5th, we get 3 employment, unemployment reports 5 days before the FOMC. And don't forget about those tariff updates. I know I'm doing things out of order. Community topics, what moves, if any, did you do today? Did you buy anything? Did you sell anything? Comment below. It's nice keeping up with you guys. Robschild does nothing, sits on hands. Thank you for watching, liking, subscribing, commenting, and supporting. And no changes to the ball ratings. Onto the charts, you got to take them with a bit of a grain of salt with the bond markets being closed today. Cats are away, mice will play, but S&P 500 rose 0.2%. I talked about yesterday Bitcoin having a tepid bounce over the fact that the government was reopening. I was actually expecting Mr. Market in his infinite wisdom to get a lot more bullish in Bitcoin here, because I thought it was going to be kind of like, that's the greatest news in the world. Let's just pump this thing higher and higher. And instead, yesterday's move, it was tepid. We were up 1.2%. Not a notable or large move in Bitcoin whatsoever. And then today, we reversed all of that, and it looks like we're falling right now. We're down 3.3% as I record it, 102,460. And I am short Bitcoin still. I'm planning to exit at 96,000 at the moment. And before I move on, we do need to ask ourselves, what does Mr. Market need to get bullish here in Bitcoin right now? The government shutdown was, in my mind, like something that was sort of holding markets back. And this is the reaction. This is like hardly a reaction. Also in total crypto market cap minus Bitcoin, it went up 1% yesterday, and now we're down like 4%. So these markets are just screaming risk off right now to me. The only other chart I found mildly interesting was crude oil rising 1.7%. Now, some people seeing this cup and handle pattern see a target of $65 to $66 a barrel before heading lower. Everyone thinks it's going to go lower. I think it's going to go lower sooner than later, and plus we're still in the pattern of lower highs and lower lows on crude oil as I record. That can change, but that's all I have for you today. Hope you enjoyed. Thank you for watching, and see you next time. Robschild.